this evening movement on gold,
Yeah.
I was actually able to see the breakout coming, and yes, it played out as I'd marked it. So yeah, it's good to see that, right now I can see some of these things they play out. Yeah, it adds on to the confidence. It builds onto the confidence.
Right. That's good to know. It's good to know. And okay. I said earlier, it's good to know. Right. So all we do is we just be, briefing through what we already know. You get, it's just going to be more like a recap. You understand? To just um bring back what we know. You get, refresh our memories and stuff. You get. So I'm not going to be going through old, like too old price actions. Like I'm not going to be going through old price actions because my subscription expired early this week. That was on Sunday, right? Yeah, on Sunday. So I'm not going to be going too backward. Okay. All right. So in this case here, first thing first, I took this buy. I took this buy here. There's a daily CRT here. You get, it's not all that clear, but looking at this was what caused this initial pump. This OCL here on the weekly time frame, right?
Okay.
That was what I saw initially. Okay, so switching to the daily time frame. On daily time frame, I could see that okay, yeah, price reacted from several zones here. You could use maybe a fair value gap here. Do you understand? There's a fair value gap here, and then there's this OCL here. But this OCL was not properly mitigated. Do you understand? This OCL was not properly mitigated. If you look closely, it was not properly mitigated in any way. It's just more like what you call a sniper entry. You get, most times, well, that sniper entry that we all used to say, okay, I want to catch sniper entry, is an improper mitigation. You get it? In most cases, it's an improper mitigation, and price is most likely to come back to that zone. You getting it?
Okay.
Okay, so looking at this, after this mitigation, this is the daily time frame, right? I saw price created this what's it called? I saw price created this CRT here. You get, this is a sweep. It was not very obvious. You get me? I want to see that price does. Remember from the previous classes and videos and every other thing we've been doing, I do explain and tell you that once I see price mitigate, especially an OCL, I want to see a double mitigation. I don't know if you remember me saying that. That if price mitigates an OCL, I want to see that price comes back to that zone again. You get me? I think I've talked about it, like the double entry or double entry confirmation or
to
double
retest
mitigation.
the zone.
Exactly. Yeah. Exactly. So that would mean this is going to be like should I say engineered liquidity, right? That's going to be like an engineered liquidity. Okay, so fast forward, looking at this daily CRT, I was going to target, or I'm definitely going to target the drawn liquidity, which is the next high. This is a buy scenario, which is the next high. Can you see it? Okay. So looking at this now, switch to the lower time frame. In my case, I'm going to use the H4. Okay. So on the H4 now, I can see that the initial mitigation, if you look closely now, you see that price did not really mitigate that initial daily entry. You see that?
Okay.
You see that price did not really mitigate that entry. Now, in this case, now based on what I just said, I've not even looked at this place before I said what I said. Any OCL mitigation, can you see this? Price mitigated this OCL. This is a proper mitigation now. Are you seeing this? This is a proper mitigation now. You seeing this, right? I see that price found its way back to that same zone again. I seen it. So I saw price mitigate this zone initially, right? That was enough confirmation for me to know that, okay, yeah, this entry, this my setup is going to hold. But I cannot just enter just like that. You get, assuming I had entered now, I would be risking too much. Assuming I entered from here, I'll be risking too much. You get it? My SL is going to be it's going to be too tight compared to it's going to be too big compared to the reward. You getting it?
Yes.
Yeah. So after that mitigation, I saw that price created a new support. Do you get it? I saw that price created a new support. And then I don't know if I've mentioned this in the previous classes we've held, that if you are entering from a support, your target should be another resistance. You get, if you are entering from a support, your target should be a resistance, and if you're entering from a resistance, your target should be a support. I don't know if I've said so before now. Okay. So even if I've not said so, I've said it now. Right. So okay, let's move forward. Now, this mitigation, many of us, in short, I would say, okay, let me still use the word many. Let me use the word majority, might not catch this first entry here due to, or should I say, reason based on there is no let me use the word confirmation, right? There's no confirmation here on this time frame. There is no break of structure. There is nothing here for you to validate that, okay, yeah, the trade is going to hold or not. Mind you, this was a daily CRT, right? It was a daily CRT. So now, switching back, let's switch to the H1. On the H1 time frame, what do we want to see on the H1 time frame? First of all, what do we want to see on the H1 time frame?
A mitigation somewhere?
Not just a mitigation. What else do you want to see? Okay, yeah, mitigation, fine. What else do you want to see on the H1?
We want to see a change of character.
Mind you, we didn't get a break of structure on the H4. You get. So we obviously want to see a break of structure in the direction the market is going. You get it. Let's clear out most of this so we don't get too confused and stuff, right? So if you look here now, even without using the line chart, you can see that this is a break of structure. You get it. But you have to use the line chart clearly. This is the line chart now. You can see that very clear. That was a break of structure. You get it. Still on this line charts now, we can see this is a QMR, the Quasimodo reversal pattern, right? But I am not going to enter from this zone. I'm going to use this extreme. You get it. Once I see something like this, I love to use the extreme as my entry. You get it. So switching back to the line chart, I can see that price reacted from a support zone, right? And if you look closely, this is my engineered liquidity in between. You see that this is my engineered liquidity in between. So I can decide to maybe further switch to the 5 minutes time frame or whatever time frame I might decide to use. You get, I can just decide to switch to any time frame that I just feel please. You get, any time frame I feel is good. You see, on this 5 minutes time frame, the liquidity is much more clearer here. The liquidity is much more clearer here. You might still want to refine. This is a QMR here. This is a QMR here. You might want to enter from there. You can, enter here. Your stop is going to be at this low, and then your target is going to be here. Your target is going to be at the daily zone, right? That's a clean 9R, 1:9R. You see how clean that trade is? See how clean it is? 1:9R. Very simple. So it's just about switching between time frames, knowing the direction. In as much as you get the directional bias right, you don't have any problem. You get, if you check most of my trades lately, I've been using the 5 minutes time frame. If you notice, I've been using the 5 minutes time frame. Now the reason I've been using the 5 minutes time frame is because I've built my directional bias, right? I've built my directional bias. On the 5 minutes time frame, I tend to see it much more clearer than it is on the higher time frame due to this recent price action. Are you getting it? Due to the
Yes.
recent price. So the recent price action is kind of shitty. You understand? You're not seeing everything as clear as it's supposed to be. Yeah. So let's look for one more example, then we entertain questions and make it a fun class. Right? Let's clear the previous ones. Okay. Let's look for see this indecision candle. Bro, I respect indecision a whole lot. This indecision candle. Once I see this indecision, I think I've mentioned something like this in our previous class. Now, once I see anything indecision, I want to enter from there immediately. So most times, it's a blind risk for me. You get most times I just enter from there. I just enter from there directly because that indecision candle tells you that that zone is just valid. That zone is just valid. That's what it tells you. That the zone is just valid. So refining this, mind you, on the daily, that was the daily time frame. You see that it was more like an indecision on the daily time frame. You get. Let's switch to the line chart. See what it looks like. On the line chart, it looks like a support on the line chart. You see that? Yes. So now let's refine. Our direction is bullish now. You get me? Our direction is bullish. Let's say we are targeting this drawn liquidity. Mind you, this is a drawn liquidity. You get me? So let's say we are targeting that drawn liquidity. Now let's refine. This is where the work comes in. From the daily time frame, first thing first, we switch to the H4 time frame. Now on the H4 time frame, if you look closely, you can see a couple of things here. Yes. So on the H4 time frame, you can see a couple of things here. Now, there's a break of structure here.
Yes.
Another indecision. There's another indecision candle. Let's switch to the line chart to see that. You see that there's a break of structure. Now, what is the duty or what's the importance of a break in your setup? A break of structure is what tells you that your entry is valid or invalid at the same time. Do you get it? A break, depending on how your structure break. For example, let's take this as an example. Okay, this is a break of structure here now, right? So this break of structure is what tells you that okay, yeah, price is going to use this zone as a liquidity. Price is just going to come back to either of this zone. You get it? Either premium or discount. We're going to be talking about ranges sooner or later. We'll talk about ranges. You get me? So price, this is what tells you that price is going to come to this zone. This is your premium or discount zone, right? Have you I don't know if you've heard about PDRA. Premium, that's
I've
premium
heard
and
about
discount.
it, but you can explain it further.
Yeah, that's premium and discount zone. You get
premium and discount, yes.
Yes, that's what it is. So it's more like this is the premium and this is discount. You want to sell from premium and you want to buy from discount. Right?
From discount, yes.
Yes. If a company is giving a discounted price, you tend to get more customers, right? And then when they are giving premium prices, most people want to sell. So that's just the logic. It's the same logic here. You get me? So this break of structure signifies and tells us that okay, price is definitely going to come to this zone, around this zone. You get me? This is the 50%. So price is going to come back to this zone. You want to buy from here. So your duty is to look for the point of interest that price is going to come to once after this retracement. You get me? Your duty is to look for where price is going to come to and then target the next high. Okay, I'm running out of battery. Okay, so do we get that concept?
Yeah.
Okay, so now let's move back to the chart. Looking at this, we can see that zone, and if you look closely here, there's an inverse OCL here, an SMC trader will call that another block.
Order block, yes.
If you look closely, that's another block there. So there was a mitigation here at first. See that there was a mitigation here at first. tells you that price is definitely going to come back to that zone. Remember what I told you about OCL? Price would always come back. It must mitigate
It
it
comes
more
back,
than
yes.
Yes, it always has to come back. So that is going to be, you can enter directly from the H4. But me now, based on the kind of, I don't know, let me use the word bad character I learned recently, I would switch to the 5 minutes time frame. That's one of my bad habits now. Always using the 5 minutes time frame. Sorry. Okay, now the chat is missing. Okay. Okay. So let's from the H4, let's move to 30 minutes first of all. Let's refine to 30 minutes. Okay. Okay. So So on the 30 minutes time frame, we have this. This is the initial mitigation here on the 30 minutes time frame. This is the initial mitigation, right? So, okay. This is initial mitigation on the H1 time frame from the supports. Okay. So here now on the 30 minutes, this is my break. Sorry. This is the first break of structure on the 30 minutes time frame. If you look closely, this is the first break of structure. Can we see that? So now I can see another indecision candle, which is what I want to enter from. Very deadly. See this indecision candle, one of the most powerful candles to ever be created. So I want to enter from here. My stops is going to be at this low. My stop is going to be at this low. For me, it's even too big, but I'm just going to leave it there. And then my target is going to be that high. So on this 30 minutes time frame, it's giving me 1:5R, almost 1:6 there. But if I switch to that 5 minutes time frame, it's going to be giving me close to 10R on the 5 minutes time frame. It's going to same setup. The same setup. It's going to be giving me close to 10R. Let's see what that is. Let's see what that is. Okay. Yeah. Yeah. So this is the entry targets here. Less risk. That's part of the reasons why I love this 5 minutes time frame. You are risking less. So can you see that? It's giving me 11RR. It's giving me 11RR. Can you see that? Are we still together? Are we still together? Let me check that. We're still together. Can you guys still hear me? Please say something if you can hear me. Say something if you can hear me, please. So I'll be sure we are together. Okay. Okay. Are we still together? Okay, I want to believe we are together.
Yep.
Okay. So did you get the explanation I gave?
Yes, I got the explanation.
Okay. So yeah, that's literally how I frame my setup recently. And like I said, it works on any pair. It works on any pair, you get me? But as you can see, you see my watch list. I have just two pairs on my watch list. Just two. XAU and Euro JPY. Those are the pairs I'm going to focus more on from now till next year.
How do you choose, okay, apart from gold, how do you choose these other pairs to focus on?
Okay. Basically, I just look for a pair that has let me use the word a reasonable price action. Do you get me? Like a price action that is not shitty. If the trend is bullish, it is bullish, and if the trend is bearish, it is bearish. Unlike Euro USD, I picked Euro JPY. Unlike Euro USD has a very, very shitty price action. You get it's complex. You understand? Let's check. So I'll show you what I mean. AURUSD Forex.com. Now look at this price action. It looks bullish. It looks bullish now, right? It looks bullish. You might get a setup and try to execute, right? You might get a setup and try to execute, and then you might end up hitting SL, and then price goes in your direction. You get it? Let's take for example now. Let's take for example this entry here. Remember that indecision candle stuff I told you about? This is one here, and then targeting the drawn liquidity, obviously. So let's refine this. Let's refine this to the H4. Yes. Where's our zone? Okay. Now looking at this on the H4 time frame. Yes, this is where the whole story starts. Now on the H4, this is where our break of structure is. Let's see. That's how our break of structure is on the H4 time frame. Let's still refine to the H1 time frame. It's not giving us any entry on the H4. Remember that. It's not giving us any entry on the H4. Let's see if it gives us one on the H1 time frame. Now look at this on the H1 time frame. Can you see this on the H1 time frame? No entry on the H1 time frame. Can you see that? No entry. And there are different valid setups. You see, this is a QMR here. Failed to mitigate it. This is a breaker block kind of stuff here. He also missed it. I see that.
Yes.
So there's a whole lot. That's why I don't like trading Euro USD. The price action is very shitty. It's very, very shitty. But Euro USD.
Oh yeah, Euro USD.
Yes, Euro USD price action is very shitty. It will make you feel like you don't know what you are doing. It will make you feel like no matter how correct your setup is, I would not advise a newbie to trade Euro USD. I'm telling you, even advanced traders, they avoid Euro USD. Not talk more of newbies. You get it. So let's take for example now. Look at Euro JPY. Look at Euro JPY. This is that same rejection. I mean indecision candle, right? And I said targeting the drawn liquidity. Now let's look at this. Switch to the H4 time frame. Now on the H4 time frame, we could see that zone became a QMR, right? It became a QMR, and there was another indecision candle there that was mitigated, respected right from the H4 time frame. This was the mitigation here. Look at that. That was the mitigation on the H4 time frame. Same H4 time frame. Can you see that? Now, looking at this now, even on the H4 time frame, we have our break of structure already, which is this, even without switching to the line chart. This is let's switch to the line chart. Can you see that on the line chart? So this would have been this QMR here would have been my entry. Let's refine that to H1 time frame so that we would get what we need to get there. Okay. Good. So now look at this. Price use this breaker. This is the breaker that we use now as entry. Can you see this? It's the same setup on Euro USD. The same setup on Euro USD. But you see how this one is direct compared to Euro USD. Same setup. See how neat this one is.
Yeah. You get I tried to look at Euro USD, but unless probably short-term trades, but it's not giving something very distinctive for now.
I'll be frank with you. I'll be frank with you. I'll tell you to avoid Euro USD for now. In short,
What
just
about
avoid
GBP USD?
Yeah, you can trade GBP USD if you know how to read slow price action. You get it. GBP USD most times is more affected is more affected by the slightest news. GBP USD. Let me show you something here. The slightest news affects GBP USD. The slightest news. Let me show you something here. Now you look at, there are a lot of imbalances on GU. A lot of imbalances on GU. Reason is because every news has impact. Every news has impact on GU. Each of these big candles you are seeing, these long candles you are seeing, they're caused by action or the other. You getting it? They're caused by one news or the other. So it's just what it is. Looking at this now, there's a daily CRT here. There's a daily CRT, very valid daily CRT. And targeting the low. There's no weak on that, so I would target this drawn liquidity as my exit on the H4. On the H4, I want to see price. This is an OCL here, and this is a QMR here. This is a QMR, and this is my engineered liquidity here. I can still decide to switch to H1 or H2 or any lower time frame to confirm further. I can still decide to switch, and I can still take it directly from that H4 time frame. Left for me, I wouldn't have switched to any lower time frame. So it was very clear for me. It was very clear for me there. Yeah, so entry here and then take profits here. The main reason why I don't trade G is because if you don't use a big lot size, you're not going to get what you want to get from it. You get imagine using 0.01 on GBP USD and you're targeting to make maybe $100. You might trade the whole month. you might trade the whole month and still not get $100. So that's just it. I have a low battery and I don't have lights here, so
Just one more thing. What's
okay.
your outlook on gold now?
For gold, let's see what's happening here. Okay. Gold might still go a little bit bullish. It might still go a little bit bullish. There's a rejection from this OCL here, but it's not valid. This rejection is not valid. So left still indecisive. You get there's a rejection from this zone. You get so the next candle now, the next candle might do something like this. Come to this zone. This is where I'm expecting price to reject and then come back down.
And then it's
Yes.
yes.
I'm not expecting price to break. I'm not expecting price to break above this zone. Nah, I'm not expecting it to break above this zone. If it breaks above this zone, that means price would hit 5K before December. If it breaks above, I'm not expecting it to break above this. So once it gets to this zone, I'm expecting a full and aggressive rejection to the downside, to this drawn liquidity. This is drawn liquidity. I'm expecting price to come back to this one. Yeah, that's what I'm expecting price to come back to. So for now, I don't have any valid. I'm expecting to see a daily CRT gets from here to confirm my bearish move. So I'm expecting the next candle, that's tomorrow's candle, to close with a wick, sweep this high, this current candle high, sweep this current candle high, close with
and
a
then
wick,
close back,
Yes. So once it closed with a week, then I would have my first confirmation that price is going to be bearish. I will target this drawn liquidity first. Target this drawn liquidity first. So it will be giving me something like this. You get. So yeah, that's just it. For now, it's pretty much indecisive until next week for me. Until next week or Friday. Yeah. So okay. So yeah.
Let me wait for the
That's
candle closure. I mean
yeah.
for tomorrow, and I
Okay.
see how the markets open, and I'll be following. I'll if I see something, I'll share for any corrections.
All right, no problem, sir.
Yes.
Okay.